All right. Uh, Today we are going to be covering the basics of the Bollinger Band. All right. Basics of the Bollinger Band. All right. So Bollinger Band, it is a famous indicator which is mainly used by technical analysts, traders. All right. So people who are more on technical analysts, they are more on Bollinger Band. All right. And so going into history about the Bollinger Band. Okay. So in the 1980s, John Bollinger, which is a long time technician of the markets, all right. So he developed the technique of using a moving average with two trading bands above and below it, all right. So unlike a percentage calculation from a normal average, from a normal moving average, the Bollinger Band simply adds or minuses a standard deviation calculation. Okay, so a standard deviation calculation, for those of you who don't know what a standard deviation is, so basically a standard deviation is a mathematical formula that measures volatility, showing how the stock price can vary from its true value. Okay, so by measuring price volatility, Bollinger Bands adjust themselves to market conditions. All right, so this is what makes them so handy for traders, because they can find almost all of the price data needed between the two bands. Okay, so what is a Bollinger Band? For those of those who don't know, what is a Bollinger Band? Well, a Bollinger Band consists of a center line and two price channels above and below it. So those two price channels, they are the upper Bollinger Band and the lower Bollinger Band. Okay, so let's just add one here. Let's just add a Bollinger Band. Oh, there we have it. There. So there's three lines that are represented here. These are your Bollinger Bands, which you have in your upper Bollinger, and your lower Bollinger, and your center line. All right. So this center line, we call this the EMA, which stands for the exponential moving average. Okay. So the price channels are the standard deviation of the stock being studied. Okay. So the bands will expand and contract as the price action of an issue becomes volatile. Okay. So by saying this, I'm talking about expansion, or rather saying becomes bound into a tight trading pattern, which is construction. Okay. So a stock a stock may trade for a long period in a trade, okay, with some volatility from time to time. It is better to see the trend. Okay, so traders use the moving averages to filter the price action. Okay, so this way traders can gather important information about how the market is trading. Okay, for example, when we have a sharp rise or a fall in a trend, the market simply sometimes it intends to consolidate. Okay, so trading in a narrow fashion, crossing above and below the moving averages. Okay, so it is better to monitor this behavior. Okay, because mostly traders, use the channel lines to spot such behaviors. Okay, so now that we know that the markets trade erratically on a daily basis, even though they are still trading in an uptrend or downtrend. All right. So technicians use the moving averages with support and resistance line to anticipate the price action of a stock. Okay. So the upper resistance and the lower support lines are first drawn to the extrapolated and then they are drawn and then extrapolated to form channels within which traders expect prices to be contained. Okay. For some traders, they draw just two straight lines, two horizontal lines connecting either the tops and the bottoms of the price. Okay. Now they do this to identify the upper and the lower price extremes respectively. Okay. And then add parallel lines to define the channel within which the prices should move. But as long as your prices do not move out of this channel, then as a trader, then you are confident that prices should be moving as expected. Okay. Now the basics of the Bollinger Band is that when the stocks prices, I'm referring to your candlesticks, when the stock prices continually touch the upper band in Forex terms, we say that the price are thought to be oversold, which is showing a sell signal. And if your prices continually touch your lower band, prices are thought to be oversold, triggering your buy signal. Okay, so that's it from me, guys.